Hey everybody, welcome back to the channel. My name is Mint, and on this channel I talk about stocks, investing, and finance with a keen focus on Palantir as of now because I have $25,000 in Palantir, and that is also a meme on this channel. Every time I do a video on Palantir, I will constantly remind the audience that I have $25,000 in the company, so that's why I'm making a lot of videos and having a lot of focus on this company. It's helping me understand my investment a lot more and developing my long-term conviction for the stock. And, you got to have some conviction to put $25,000 into a company. Now, Palantir and its SPAC strategy. I really want to break this down today. This is a very interesting concept. If you've ever heard of the concept of a SPAC or heard of the concept of Palantir investing in SPACs, which is a true thing, right? It's not a concept, it's a real thing. They've disclosed that they've invested in multiple SPACs, and you might be confused why they've done it. What is the future trajectory? What is the plan for how they're implementing this strategy? Then you're on the right video, because today we're going to break down ultimately what they're doing. So key takeaways before we get into the in-depth of the video, if you just want to know my overall take. Number one, I think it's a fantastic strategy. I do think it is a risky strategy because when you're investing in a SPAC, and I'll get deeper into this, you are ultimately making a bet on a company that is not proven yet. Now, given Palantir is a data analytics company, the investments that they make are kind of backed up, I would assume, by a lot of data. They probably have a lot of research team members figuring out which investments to ultimately allocate the right capital to. And if you trust the company, you would trust that they are correct allocators of capital, or at least not bad allocators of capital. So the point where you think that Palantir is a strong enough company to allocate capital in a meaningful way, the question now becomes, is Palantir on the right path? And have they made the right decisions with their allocations of capital? My take is yes, and we're going to talk about today why. Second of all, we're going to talk about why Palantir is going the SPAC route versus the venture capital route. So there's a lot of large companies, Amazon, Google, that have venture capital arms of the company, right? So Google, I think it's called GV Ventures or something, Google Ventures, something like that. And they basically take the immense amount of cash that they have and they put it into startups. And if those startups get big, obviously they get a return, or they buy out those startups, right? They create a symbiotic, meaningful relationship between them and a startup in a world in which they can't do that if they were not an investor. Amazon recently did this with Rivian, right? They own, I think, 20% of it, which is ridiculous, right? They ordered 100,000 vehicles from the company. So they can pump up the stock price just by saying, hey, we're ordering a lot of cars from the company, which is great, because if anyone partners with Amazon, that's a win-win, right? This is what happened with Affirm. I think they went up like $30 in after hours when they announced that they were partnering with Amazon. And Affirm is a payments processor. So that was really interesting, right? Because if Rivian is part of Amazon, or Amazon owns a part of Rivian, and Amazon's buying cars from Rivian, that's guaranteed revenue for Rivian. Amazon's good for it. And if Amazon owns part of the company, they're also kind of making their money back, because the value of the company that they're buying from the cars up is partially what they own. So if the stock price goes up, and they eventually sell, they get that value back. So it's like buying cars from yourself in a weird way, in that example, which is an interesting way that companies deploy their venture capital arms. Now, SPACs are a little bit different, right? SPACs are not necessarily just regular companies that you can invest in, and we're going to get into why. But the reason any large company, any ultra large organization, and Palantir is right now like a $45 billion market cap company, so it's not as big as Google, right? Google's in the trillions, but it's pretty big. It is very hard to move fast and break things, in the famous words of Mark Zuckerberg. The people that move fast and break things are startups, and I currently have a startup as well. Links in the description if you want to check it out. We're trying to move fast and break things in the audio space. But nonetheless, when you're trying to move fast and break things, you are trying to go faster than the incumbents that exist. And Google, if it wants to innovate and create new features, there's too much bureaucracy in Google, too much bureaucracy in Amazon, Facebook, etc., for Facebook to come up with an Instagram, right? Or for Google to come up with a Fitbit. And this is why those acquisitions are made. The ability for you to acquire these companies allows them to not become as big as you, right? So it kind of stifles the competition, but it also allows you to use your venture arm to invest in these companies so that if they do get big, you have a meaningful stake in them. And you kind of have to do that, or else you're going to compete with them. And again, it's very difficult for large companies to compete with these small startups, because startups can move quick. They can get things done immediately. They can ship products quickly. They don't have to deal with all these regulations. Big companies, if they're introducing a new product feature, there has to be like months of marketing planned around it, because the perception of that product feature failing or succeeding could like really affect the stock price, right? And they have a fiduciary commitment to shareholders. So at that point, that is sort of the reason why these ultra-large organizations philosophically invest in these companies. Palantir is no different, right? Palantir is, as it's becoming a big company, it also has interest to invest in different companies and ultimately be able to get a return on that investment. Now, before we get a little bit more deeper into why Palantir is doing this, let's talk about SPACs, right? What are SPACs. SPACs are special purpose acquisition companies. I made a video about this a while ago, back in February. I'll post that video in the description if you want to know a little bit more in depth of what SPACs are. But special purpose acquisition companies are blank check companies. So these are companies where, the stock price starts at around $10, $11 and you're buying a piece of the company even though you don't know what you're buying. So if you invest in a SPAC, and there's a ton of SPACs on the public markets right now, you don't know what it is, but it is a guaranteed date that SPAC, that $10 stock that you buy or whatever, let's call it ABCD, right? ABCD SPAC is going to merge with some company. Some company is going to take capital and use the capital that they raised from the SPAC, which ends up being like $500-600 million bucks, and merge it with a company that's trying to go public. So that company that's trying to go public, instead of doing a traditional IPO, they can get the money from the SPAC, the special purpose acquisition company that they were when it was a blank check, and then that becomes a whole new company. SoFi recently did this. Chamath Palihapitiya, he's a pretty legendary investor. He has been known as like the king of SPACs. He kind of innovated the concept. So if you want to search up him and sort of search how he thinks about SPACs, then that's something to search about as well. But Palantir is taking advantage of the SPAC market as well, right? So a couple things, right? Palantir's latest investment was announced when Babylon Health said it's going public through a special purpose acquisition company. This is a healthcare company. A group of investors, including Palantir, committed to invest a combined $230 million into the Babylon transaction. So Palantir, after that news came out, has agreed to at least 6 SPAC deals in the past 3 months, right? And this is a really, really interesting thing because it's like, what are they doing? Why are they investing in these like proven, unproven special purpose acquisition companies that are kind of like startups but are past the stage of like normal startups? What really is the key thing that they're trying to do here? And I want to break that down. The real idea behind why I think they're investing in SPACs and why I think it's important for them to ultimately invest in SPACs is because they are trying to find different avenues and diversify the means by which their company not only can get a meaningful return, right? They're not doing this just to get a return on capital, but can integrate data analytics. This is my hypothesis within those companies. So Palantir is a data analytics company. It takes data, it synthesizes that data, and then it distributes that data to the world or to its clients, and those clients pay Palantir a fee for the software that they create that allows it to synthesize that data. Those companies save money because of Palantir doing that, which is where the value transaction happens. My guess is like if Palantir invests in companies that are rich in data, and this is why I'm looking over to the screen here, because Palantir's, because I'm reading from this article, Palantir's backed companies ranging from drug discovery to robotics, air transport. It teamed up with GM, General Motors, and $100 million investment in Wejo. I might be saying that wrong, WEJO, which is a UK-based developers of connected vehicle data systems. And it agreed to invest $41 million in Lilium, an air taxi company that's developing a 7-seat electric vertical takeoff and landing aircraft. Guess what? To do that, you need a lot of data in order to make that happen. My point here is that I don't think Palantir is just investing in companies so that when those companies go public or when they go to the moon, Palantir has meaningful ownership stake in them, which that will be good and that will reflect in the stock price. That's kind of like what Tesla did when they bought Bitcoin and they sold a little bit off of it to get to like 4 quarters of a row in profit. So they sold like $100 million of Bitcoin and they proved they made a profit, which they technically did, but it wasn't from selling the cars or selling EV credits. It was selling some of their Bitcoin that they bought low, sold high. I think Palantir is going to benefit from that, but I also think Palantir is going to benefit from integrating the data systems, Foundry, Apollo, Gotham, whatever flagship software they want to integrate into these SPACs. Like, that's my overall thesis in terms of how I see these SPACs playing out. And I would love to know what you guys think. I think that if they can invest in companies, and those companies, they can prove that they can invest in companies that are rich in data, and they can prove that their software helped those companies ultimately achieve the moonshot status that they're going for, then it's just not only good marketing for Palantir, it is more and more case studies that Palantir doesn't have to pay for, theoretically, right? They're paying to make an investment, but if you're going back to the Amazon Rivian thing, if you're paying but you know that startup, that company, this, what is it, Wejo or whatever, is going to use your data systems, your Foundry software, your Apollo software, to integrate into their connected vehicle data database, well, then you not only have an investment, you have a client. That's very important, right? Because if you've invested in a SPAC, and that SPAC, the world doesn't really know about it yet, but you know that SPAC is going to heavily use and synthesize data, and they're going to use your product. Not only do you own a piece of what you're eventually going to have a meaningful ownership stake in, but that company's also going to pay you to own them, right? It's kind of like you're getting the money back for investing in them because they're using your product as a service. That to me is really important, right? And that's sort of my overall thesis for what their plan is with SPACs, especially, and I'm saying this because the SPACs that they're investing in are rich in data, right? And that's sort of the key missing link that I think most people aren't talking about when it comes to why they're doing these SPAC deals. They're also betting on life sciences, right? So Palantir is putting hefty resources into the health side of his business. Last month, it hired Dr. Bill Kasler, which is a former of IBM Watson Health, which is a pretty big deal. As his first U.S. government chief medical officer, the FDA, Centers of Disease and Control and Prevention, and National Institutes of Health are all Palantir customers. So think about that. The FDA, the CDC, and the NIH, which were like the major organizations you probably heard of during everything that was going on with the pandemic in the past year. These are all clients of Palantir, right? Like that's really important to understand. They invested in Babylon Health, which I just mentioned, which is a healthcare company that is rich in data. They are servicing major health institutions that need synthesized data in order to make effective decisions for like telling the public what to do. And Palantir is investing in the future of those potential organizations in the private markets versus as a public entity. And that's where I think, again, the data thing is important here, right? Because if Babylon Health is a private company that Palantir is investing in, but it's kind of doing what a CDC NIH does, and I don't mean that literally, but I mean that in the healthcare medical education space and like overall guidance for health. And Palantir is already servicing the public clients, the CDC, et cetera, then it's also going to prove itself to be able to serve healthcare clients that use a lot of data. And this is just another example of more and more companies that are going to use data in the future, that are going to have to integrate systems to synthesize and understand and make effective decisions because of their data. And Palantir is going to be a key software that ultimately allows those companies to do that. The company agreed to invest $21 million into the deal for Sarcos Robotics, which makes industrial robot systems. On May 11th, Palantir agreed to put $20 million into a mobility company that didn't have a name in the filing, but both of those deals included multi-year subscription agreements. So again, I think this is ultimately the missing link. I think SPACs are a great way to invest in versus like using your traditional venture arm because of the way in which SPACs can raise capital. And Palantir having a meaningful ownership stake benefits them for two reasons. Number one, if the company actually goes public and becomes super big and Palantir owns a percentage of it, that's ultimately going to reflect in the share price for us as shareholders. And number two, if they ultimately use those companies as clients, which it seems like that's the inevitable thing that's going to happen, then those investments will pay back 10 times, what they invested, not only because of the return on investment, but because of the fact that they're getting them as a client and locking these people in as clients, locking these companies as clients when they're small, when they're $4 or $5 billion companies means a lot when they become $40, $50 billion companies a decade from now. This is the master plan. This is what's going on with Palantir. This is why I'm so excited and bullish about it. And this is ultimately why I think they're investing in SPACs. So let me know what you guys think. This was another video on Palantir. Again, I have $25,000 invested into the company. So like I kind of care about this, but interested to hear your thoughts, interested to hear your analysis in the comments. And yeah, thank you guys for watching. I'll see you in the next one. Bye.